Okay, so here's what's up. Behind the scenes at A1 Trading for the last year, we've been working on a secret project. I've been sneak previewing it a little bit here and there on the live stream. Today, I'm going to show you guys officially what we've been working on. It is not yet currently available, but we are very close, and we're going to be doing some early access information today. So if you are a stock trader, if you are somebody interested in trading ETFs, I trade ETFs quite a bit. I trade, just so many different things. Semiconductors, like I showed you just a second ago. I trade sectors. I trade like real estate. I'm long the real estate sector. These are things that I have traded for a long time and really like to, beyond just trading the indices, you can get down into individual sectors. I can trade the real estate sector. I can trade semiconductors, technology, financials. I can trade all sorts of individual things. Well, here's the cool stuff I want to show you. Today, we are announcing early information on the brand new A1 StockBox, which is a very, very exciting thing that we've been working on behind the scenes for about a year now. So many of you guys are familiar with the Edge Finder, right? The Edge Finder is built specifically for FX and futures traders, whereas the brand new StockBox is a new tool with a totally new set of data, totally new set algorithm built specifically for stock traders and options traders, as well as ETF traders. So I'm going to show you guys some of the new features that are available within this new tool. And while I do that, if you would like some early information about this tool, I just dropped the link here in the chat. So for those of you who do want access to this, if you have the Edge Finder already, or you are somebody who's interested in stocks or ETFs or options, take advantage of this link I just dropped in the chat. That is going to be your early access information guide. If you'd like early information, very special early discounts. We're trying to look for people who would like to give us some feedback on the tool. In exchange for that, we'll give it to you for a very cheap price. Okay, so what is the StockBox? StockBox is the same concept as the Edge Finder, but built for stocks. What you can see here is we've got all sorts of different stocks on the screen right now. In the top stocks page, the top stocks page allows you to look at scorings for stocks that we like to watch. So Lululemon, of course, you've got things like PayPal, you've got things like Starbucks in here, AT&T, Microsoft, T-Mobile, Google, right? Intuit, all these different companies. And what we've started to do here with the brand new tool is score things by their financials, company financials, the momentum of each chart, the technical trend that we're seeing in each chart, as well as the 13F scoring, which shows you what institutional money is buying and selling, as well as the insider transactions. So this software, just like the Edge Finder pulls in information that's relevant to futures and Forex traders, this new tool allows traders to track all sorts of powerful insights for stock traders. So we also have one of my favorite features on the entire product, the top sectors page. And the top sectors page, if I can load this properly, we'll do kind of the same concept as what we've discussed with the Edge Finder's top setups for Forex and futures. The top sectors, if it would load, I'm not sure why it's not. It will load things like IWM. It'll load things like XLF, which is financials, real estate, consumer staples, technology, all sorts of stuff in a singular page. And I do warn right now, when I say early access, I do mean early access to a tool that we are actively continuing to develop. Now, when we launched the Edge Finder, when we first launched it, looked like a baby version of what it is today. But we did that so that we could take on early access people to try out the tool, to give us feedback, and to help fund the project as we continue to build it. So the StockBox, we're going to be doing the same thing. We're going to be offering very discounted early access to this tool when it launches, which is coming soon. If you'd like all the information, I dropped the link a moment ago. I'm going to drop that link one more time here. Here it is. Fill out this form if you are interested in early access to the StockBox. All of the information for that will be found there. So all of the early access discounts, all of the release date information, all of the features in detail will be shared there within that form. So again, take a second to fill out that form, get in on the wait list stuff there, but you get access to the top sectors page, which, by the way, I took a stock or a trade on XLRE, which is an ETF that tracks real estate. I liked the setup on the StockBox because it was looking at, again, a lot of the macro here. So you've got macro scoring, so GDP, PMIs, all that same thing that you might be familiar with on the Edge Finder. We've now carried that over to some of our favorite ETFs, sector ETFs like consumer discretionary, financial services, energy, Russell, utilities, industrials, gold miners, semiconductors, technology. We've brought basically our technology to the StockBox, which is Edge Finder kind of reformed specifically for stocks.
Market analysis, free trading courses, Edge Finder data, and special offers. What do these things all have in common? They're all available for you right now inside of our free Discord. You can click the link down in the description below to join the free Discord today and get access to all of this and more. Stay up to date with all the latest trading information and A1 content. And if you want to upgrade to our Gold VIP Discord that features every single trade that Trader Nick and our other professional analysts take, you can find the links for that in the description as well. So don't wait, go check out the free Discord today.
So I took this trade yesterday. I liked Bitcoin a lot. It was on my watch list here yesterday. Bitcoin right here. It's a top setup on the Edge Finder currently. It pulled back to a level that I had been looking for. This nice level of support got tagged and boom, off to the races. So what I did this morning is my stop loss was a little bit wider. I think my stop loss was just down here or so. And I just wanted to trim my stop loss slightly here this morning. And I'll show you the actual P&L on the trade as well. IBIT is the ETF that I trade for Bitcoin. And you can see we're up about 2,300 bucks on this trade so far, but I have not yet trailed this stop loss. I'll show you how I do this. This is a little confusing because I trade ETFs. So I just have to adjust this accordingly. My stop loss is now 1.63% away from my entry. So let's go do that same calculation there. 1.63 would put us right here, 36.77, 36.77. We just modify there. And now my stop loss is trailed on my own personal capital. So there we go. Stops trailed. Bitcoin looks good. I like the chart for an upside move. And I've been kind of in this camp for most of 2024, which is, by the way, yes, we have breaking news. Let me get over there. 9:45, we have PMIs. Unemployment claims coming out here in just a second. Let's see if this causes any stir here this morning. Sometimes it does. Most times it doesn't. Let's see if we get any significant spikes. 227, slightly better than expected. Let's see if that causes any stir in the markets here this morning. Arguably decent for the dollar, right? Some strength. Unemployment claims coming out. Revisions to the last one. Very little to no revisions. 227,000 unemployment claims. That's a strong jobs print. We will take that. And again, it kind of continues the story, which is stocks doing okay on a decent economy. Economy seems to be holding up okay. At the same time, dollar index strength may persist with that unemployment claims. But again, we've got basically a number coming out here this morning. Sort of close to as expected, but not quite. I mean, it's a little lower than expected, which is good, right? Less people filing for unemployment is a positive thing for the dollar. And arguably a positive thing for the stock market as well. Also, people mentioning the yen as well. I'd like to look at the yen just to see what's going on over there. Japanese yen here this morning. Any pullbacks? Dollar yen, maybe a slight pullback here. Dollar yen's been such a beast. This has been a chart that I've been wanting to actually look for possible long setups on. Will the dollar recover? I'm not sure what you mean recover. If you mean go up, I mean, it's been up for weeks. Dollar has done a very good job recovering so far. If you mean like, does it continue to go higher? I actually like the idea of this thing continuing higher. I mean, with unemployment claims coming out good, jobs data generally very positive, really, really interesting move on the dollar. And I do think that yesterday, was it Stan Druckenmiller, who's a really, really famous trader and investor? He mentioned yesterday, his words were in an interview, he mentioned all roads lead to inflation, which I very much agree with. And if you've been watching my videos and streams and stuff, you know I've been talking about that constantly. There's a lot of paths here right now that lead to inflation staying sticky. The jobs data is pretty good. Companies are hiring people. People are relatively employed. At the same time, you have government spending expected to be very high, regardless of who the president is, right? Both presidents are going to spend a lot of money. So there's a lot of roads that lead to inflation. The Fed's also looking to cut rates. So to me, a stronger dollar makes a lot of sense. Until something changes, until you get a change in the data, until you get, the economy materially weakening. I'm sorry, my words are not coming out right. But that's not the case right now. What we see is again, I kind of agree. Most paths, if not all paths, lead to inflation, which means US dollar higher. So anyways, the dollar index, with it going up like this, is it set to continue? And what does that do to gold? Well, gold is up and away anyways. People have been, I get this comment very frequently. Whenever the dollar index and gold move in the same direction, I get a bunch of questions about it in my comments, in my emails, my DMs, people saying, Nick, dollar index, shouldn't that be pushing gold down? Why is gold going up with the dollar? Well, this can happen, and it can be confusing, and it's understandably confusing. You would think, well, if the dollar is strengthening, shouldn't that push gold down? That's traditionally what people kind of expect. Here's the thing. The reason that it's not such a one-to-one is because it is possible that the dollar index is strong relative to other currencies that are weaker. And at the same time, all currencies are losing purchasing power, causing gold to go up. Let's break that down a little bit more. Other currencies, it's not that the dollar is just incredibly strong. Like, it's not that the dollar looks like, oh, they're never going to cut rates again. The Fed's still going to cut rates. That's the expected outcome. But what's important for you to understand is that the Fed is expected to cut rates slowly, whereas other central banks are expected to cut rates faster. So other currencies, it's not that the dollar looks strong, it's that other currencies look weak, right? When we look at the euro right now. The euro's dropping hard, the pound dropping hard, the Kiwi dollar, the Canadian dollar is getting smoked by the dollar right now, right? The dollar is not, it's not that the dollar is remarkably powerful because we're never going to see rate cuts and that they're going to hike rates. That's not the case. The story is the other central banks, like the Bank of Canada, which cut by 50 basis points yesterday, which is 0.5% for fancy finance bro wording. They cut 0.5% on their overnight rate. Well, other central banks are cutting rates faster. That's what's making the dollar look relatively strong. But that doesn't make the dollar necessarily be this unstoppable force that makes gold go down, right? Now, if central banks were talking about hiking rates, gold would plummet. But central banks are talking about cutting rates. That's easing monetary policy globally, aka money printing everywhere, not just the US, money printing in Europe, money printing in all over. When central banks are more dovish, gold typically goes up, regardless of what the dollar specifically is doing, right? The dollar is just one part that gold looks at. The gold market is looking at what's happening in Europe, what's happening in China, what's happening in Asia, everywhere, right? Yen pair's been moving up quite a bit here recently. I'm curious, Miko, what are your thoughts on these ones? Are you watching any of the euro yen, pound yen, dollar yen?
I'm keeping an eye on the yen pairs because they're trading at some really big levels on the weekly chart. And I don't want to cement a bias just yet. I'm kind of waiting for the weekly candle to close, but CAD yen, euro yen in particular, really big level we're trading up here, and these are kind of like turning points for the market, at least for me anyway, because if we were to break above them, then I'll be looking at a lot more longs. But if we do hold these areas, then I'm expecting a bit of a bearish trend to form, and then I'll just be looking to catch some pullbacks to the downside. So we're trading at some big areas, and depending how price looks by the end of the week, so how this weekly candle close, it will then dictate my bias, especially for dollar yen as well, trading at a really big level here, around 152. So if this candle was to say close really bullish above it, that's a sign of momentum breaking through the level, and then possibly next week we see continuation of that. But if we just leave a big wick there and say price closes somewhere around here, that's more of a sign of rejection, and we could be looking at turning around. So I'm kind of on the fence with the yen pairs. I need a bit more information before I have that bias, but once I kind of register what price is trying to do at these areas, then that will make my job a lot easier. But yeah, I'll probably have a bias for next week, but for now I'm kind of still on the fence.
Yeah, and just looking at those weekly candles as you were going through them, it does seem to be some wicks forming on the top there of dollar yen, pound yen, euro yen, all of the yen crosses. Big pop here to start the week, but we'll see how they close, because if they do close with a very long wick on the top, yeah, we could see some downward pressure. But as you mentioned too, if you close very strong here, that would definitely signal, in my view, more strength here. So we'll see how that plays out. What about yourself, Marco, in terms of yen crosses? Take your pick, whichever one you'd like to look at.
Yeah, we're gonna cover EJ. So EJ on the 1 hour chart broke out of this really flat range. So I have been closely watching EJ the last couple of weeks. Has been pretty flat, finally broke out with some decent momentum, I would say, which was a very good sign. I didn't get any high probability buy setups, but I definitely liked this momentum on that 1 hour chart. Right now it is correcting a bit, printing some bearish pressure, which is not the best. But again, if we can continue with the buying, continue with this sort of momentum, I will definitely be interested. It's a much better story this week than the last few weeks, because the last few weeks on the 1 hour chart at least have been pretty corrective. So I always like to see some momentum kick in. It's usually a good sign that a bigger trend could potentially start. And as far as I remember, the fundamentals switched a little bit from being bearish to now bullish. So that's a key factor as well. That's also a confluence for an uptrend.
Yeah, and that's an interesting concept on the fundamental side, with some of the yen pairs starting to show up a little bit higher on the list when it comes to the edge finders top setups. The reason that may be too is that some of the concepts with the yen are, it typically does well when the world is a little fearful of the global economy. If back in when we saw that huge tank back in August, that August 5th drop was largely because we had a really bad NFP report. So the US jobs data looked really sour, and then everybody was like, oh my goodness, let's get into the yen. That's the safe haven / people who were very short the yen covered rapidly. So we had like a short squeeze plus demand for the yen happen at the same time. And that caused the yen to get very, very strong. Now it's a question of, with yields coming up, this is another sort of correlation that can be fun for those who are interested in that sort of stuff. I'll show my screen here. This is a fun correlation to learn about. Yields in the US have very strong correlation to the dollar yen. So take a mental screenshot of the US 10-year Treasury bond yield. And then if we flip over to USD/JPY, you can see it's pretty similar. The direction here is pretty similar. And US Treasuries trade heavily off of how the US economy is performing and what expectations are for inflation. So just interesting to kind of cross over. If you want to get really fun, I mentioned that treasuries have correlation to the yen. Well, treasuries also have strong correlation to oil. And this is an interesting one too, because oil, and now I'm going off my tangent here, but the reason I bring this up is that if oil spikes a lot, it's expected that inflation could go up. If inflation goes up, treasury yields go up because people are like, I'm not buying your bonds unless you pay me a lot more. So yields on bonds goes up too. So one thing I will say, regardless of, fundamentals, technicals, market correlations, whatever it is, I think all three of us can agree that after all these years that I've been doing this, I'm learning new things about the markets all the time. And I'm just fascinated by how deep this spider web really goes.
True.
It's crazy.
And could you mention the Bank of Japan intervention a bit? I think the last big one was in July, wasn't there?
Yeah.
Do you expect any more? I think more interventions are not expected.
Well, one thing about the Bank of Japan that is like fascinating is that contrary to like US central banking or European central banking, which they're a little bit more like transparent, I guess, on what their plans are, the Bank of Japan holds their cards close to their chest, which is very interesting. So that's why the yen intervention stuff is so violent, is because when people don't see it coming, it can cause such massive movements. So yeah, it's been a while since we saw, I mean, this definitely looks like intervention stuff, right? And then we had intervention stuff over here. And that's when, the Bank of Japan is like, we don't like where the currency is trading against others. That being said, it can happen at any moment. There's still recently they're talking about some change of leadership within the Bank of Japan, and that change of leadership, people are trying to speculate on how aggressive or not aggressive would the new leaders be in terms of intervention, because that is a decision they make, right? Are they going to buy a ton of their own currency to try and support it? So we'll see. But that's the thing with the Japanese yen. What makes it a very volatile and tricky currency is that yen intervention stuff can happen at any moment, or it could happen never. So that's what makes it very difficult to try and time these things. And I know that we typically all, we're not trading like the 2-minute chart or the 1-minute chart. So at least you can avoid some of the craziness. But when those intervention moments happen, everybody kind of stops and stares. That's for sure.
Yeah, what I read is that the Bank of Japan doesn't like to gradually pump the yen, but they take 20 billion and then they just pump it in all at once, and then you get a chart like this where it's a massive move down. So they're a bit crazy.
Get like a big bulk market order by them.
Yeah.
Now, before we start, I'll show you my position on gold, or the old position. So after yesterday's sell-off, decided to take a long position here on the after the bullish engulfing candle. This was quite late. This is normally later than I would start opening positions. Woke up this morning and it was still at entry. And accounting for the fact that we also have the US news today, I was like, you know what? It's just not worth holding. It's not worth the risk in my eyes. Even though I was very confident it was going to go up, it was just that addition of the news. I just wasn't satisfied enough to hold it. And now in hindsight, it's one of those things. If only I held, I could have been in great profit. But our job is capital protection is number one priority. So that's about it. In terms of portfolio, I am completely flat. So let me show that in a second here. It's funny, actually, someone yesterday told me to download the MetaTrader app rather than the sort of third-party software. So I've got this here. So portfolio is completely flat today as we end the week. Took a short position on euro dollar this morning. However, obviously we had news, so closed out it was only 0.3% profit. Take profit was originally down here, but then I saw on the currency indexes, the US dollar started to take a turn to the downside. Euro started to take a little bit of a push to the upside, and with US news, it just wasn't worth the hold in my eyes. So cut that one quite quickly. But yeah, I mean, going back to gold, I think there's not really any problem correcting the move that we saw yesterday. It seems like it was just profit taking. There was no significant news at all to really drive that. So again, it just looks like some larger parties in the market wanted to close some positions. So that's all it was really. However, of course, we do have manufacturing PMI and services PMI and new home sales coming up soon. So that will affect gold as well. But overall, I think, whether it's today, tomorrow, Monday, Tuesday, we will see a correction of this move eventually. Will we reach new all-time highs today or tomorrow? Let's say 27,700. I don't know. We'll see what the US news says. Possibly, but I think that's a little bit of a far target, especially for today. If we get weaker US dollar news, it would obviously help, and then maybe by tomorrow we could reach that level. But I think looking for it today is a little bit far-fetched in my eyes. So according to you, it will go up. Gold secret strategy. The secret strategy on gold is have at least 500,000 in a portfolio and just buy. Just continue buying gold. It's a great investment asset. So that's the secret strategy to gold. Before I take some chart requests, what I'm going to do is just show you guys a little bit of behind the scenes of the Forex trading or the trading industry. So this week I've had probably one of the best weeks ever that personally I've ever had. So I had a nice 1% here on euro dollar. I had 2% here on pound dollar, and then I had another 2.65% closure here. And then I made another 1% here on oil yesterday. Well, closed out today. So, you know, on the face of it, everything looks great. I look like an amazing trader, profits flowing, you know, made about 5.5% this week. But, and this is where the big but comes in, that a lot of people won't show you. I could sit here and say, you know, I've made this huge percentage gain this week, join my signals, But what I'm going to show you is the whole month. So this month actually started extremely poor. We hit, in the signals in our Discord, we hit a drawdown of about 7%, or even slightly larger than 7%. Luckily, or well, I shouldn't say luckily, but of course, you know, you play the stats, you play your strategy, and we're now back to just under that with one open position here. So we've actually balanced out quite nicely. We're back to almost break even. So although I had, again, a great day, a great week, it doesn't mean everything is sunshine and rainbows. And again, you can see here, so I didn't update you guys on this MyFX book. I showed it not too long ago, I think probably at the start of this month. And it was up, I think it was, probably about 4.77% at the time, and then hit a peak of 5.48. And during this period, it was just a waterfall to the downside. So I actually reached a max of negative 7% in equity, which, you know, if you account for negative 7%, doesn't sound awful. But then when you say, you know, it was 5%, then dropped down to negative 7, that's a really bad drop. And now, again, it's back to almost break even. So you can see this, last month was 2.35. This month is negative 3. So I'm not going to sit here and try and show off all these wins and not show you losses as well, because I think that would be very unfair, especially to any new traders in here. So there you go. I just wanted to make that very clear that, you know, although, again, this week looked great, it's not always perfect. So let's move on to some chart stuff here. Let me just read the chat here. No secret for XAU, just structure and KIV where roadblock or pause at following move. Not sure what that means, but yeah, fair enough. I took shorts on AUD CHF based on H4. Let's have a look at Australian dollar Swiss then. H4, you took shorts. I assume you mean the break of this. Took shorts AUD CHF and consolidation, but I don't really see bears following up. Could you have a look and give me a review? To be honest, this trade, in my view, is more bullish than bearish. So what we've got is the commodity prices are still holding up quite well, which obviously benefit the Australian dollar. Chinese stimulus, you know, wasn't super effective, but it's still a factor. Things in the Middle East don't seem to be a huge issue at the moment. So, you know, the flow into safe havens isn't as drastic as it was. So overall, I'd more be looking to go for long positions here, if I'm honest. But, you know, I'm not saying I am going to buy. I'm just saying overall, I would more be looking to go long. Best time frame for gold, Arshad. That's something you need to work out. Different time frames work great for different people. Congrats on the comeback. Yeah, I mean, it's just playing those stats, isn't it? Every strategy, every trader has those times where it's drawdown. It's just typical. It's as soon as I open the MyFX book. But like I said, almost back to where we were, so no issues there. DAX, we can have a look at DAX. I'm a little bit annoyed actually about these indices. So if we look at the S&P, I think I called this one yesterday on stream and I just didn't take it. I completely forgot actually to even check this market this morning. And it came down to this 50% level perfectly, retested this trend line perfectly. It was, again, you know, perfect trade essentially. But yeah, unfortunately, I missed it. It's a similar thing here on DAX. Again, I've been looking at DAX for such a long time, waiting for this trend line to get hit. And I was too focused on my other strategy on the day trading side, completely missed the entry here. So looking really for maybe another entry somewhere slightly lower near the entry point, somewhere maybe here. But yeah, generally speaking, the indices market is still very bullish. We've still got the Nikkei, DAX, NASDAQ, UK 100, Dow, S&P 500, and the Russell, all still with bullish readings on the Edge Finder, which is great confluence. So yeah, definitely not looking to sell these markets. I think if you can find your edge here, find some sort of technical entry, it's definitely a good place to be. James, your opinion on possible entries as we are close to closing weekly? There is no entries for me. I'm completely done for the week. My portfolio is flat. I've got no open trades. I am done.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.